Hello, my name is Chris Bird and I'm a certified CRS instructor, and I do about 150 seminars a year across the country. And I'm going to be making a swing through North Carolina in April of 2019, and I'm going to be in Wilmington, North Carolina for the Keller Williams office on April the 1st in the afternoon from 1 to 4 p.m. I'm going to be bringing my best course to this event, and this is a course entitled Tax Issues and Real Estate Issues Involved with the Tax Cut and Jobs Act of 2017. Now I'm going to break this course into 3 different parts so you all know what you're getting. First, I'm going to be talking about how the new law has basically changed the way a 1040 looks, the income tax return for homeowners. The fact that the new SALT limitation, state and local income tax deduction, is now limited to a total of $10,000 for state income tax, real estate taxes, and property taxes, personal property taxes, if your state imposes such a tax. And that new limit is $10,000. I'll be talking about the changed mortgage interest expense deduction, and the fact that some of your higher income clients who would possibly be borrowing a lot more money than other people may find that their interest deduction is somewhat limited for loans taken out after 12/14 of 17. Now, the second part of the course is talking about what those of us that own both residential rental property and commercial real estate properties can deduct in terms of depreciation. And this new bill is quite generous in terms of what we can do with our deductions with respect to rental real estate depreciation. And the third part of the course, which is the most important part of this, is how does your own tax return get changed or modified by this new Tax Cut and Jobs Act of 17. What we have, for the first time in my career, we have literally a deduction for nothing, a 20% deduction called the Qualified Business Income Deduction. And this is something I'm specializing in, and I know a lot about this deduction. And over the last 12 months, the IRS has changed and modified regulations twice already on what they intend to do with this 20%. Even on January the 18th of 2019, the IRS issued final regulations and also gave us a specific direction of how to claim and what we need to do to claim the 20% deduction on our rental profits on Schedule E. So those deductions, especially that 20% deduction, is going to save thousands of dollars for every self-employed person, whether they're a sole proprietor, an S corporation, an LLC, or whatever. So you need to come and learn about that deduction. Now, what else am I going to talk about? I'm going to clarify the new rules with regard to the 50% meals with client deduction and the fact that entertainment is now fairly well limited. So how do we move entertainment expenses from non-deductibility over to something like promotion or advertising, which is 100%? We'll discuss that. And finally, I'll be talking about the new higher limitations on automobile, heavy SUV, and pickup truck deductions. So this is my best course. I want you all to think about coming in the afternoon of April the 1st. Amanda, your team leader who's bringing me down here, is a personal friend and a client of mine. I've known her for years. I'm also a Keller Williams agent in Champaign, Illinois, as is my wife. So I really want you to come to this course, and I hope to see you soon, and thank you.